to the Value Investor TV podcast. My name is Becco and my partner, Hari.
Hello.
Welcome, you guys. Thank you all for joining. In this episode, we will be talking about Micron Technology. Again, as with the previous episode, WEX. I hope you guys enjoyed WEX. As with the previous episode, this episode was suggested by one of our trusted listener. So if you guys have companies in your radar that you would like us to look at, please send that our way. It would help us to know which companies you guys are interested in to produce content that you guys enjoy. So please send that over. Our email address, as always, info@valueinvestor.org. Hari, do you want to give us a quick disclaimer and maybe a few housekeeping items, such as Slack and the checklist?
Yeah, we'll start with the disclaimer. So this is the Value Investor TV podcast. We are a podcast that helps you understand the concepts behind value investing. We are not your financial advisor. We don't know your specific financial situation. So before making any financial decisions, please consult with that appropriate advisor. Okay, and then we have a couple of ways that you can reach out to us if you want to be like the listener who contacted us about Micron Technologies. You can get a hold of us at info@valueinvestor.org. And we often, actually every time that we do a company podcast, we follow a specific checklist. You're welcome to email us to and access that to get access to that checklist. And we are also run a Slack community. So Slack is an instant messaging service, group chat type service where you can contact us directly. And Becco and I are on it basically every waking hour. And Becco has no life. And we are able to answer your questions much faster. So, and you can interact with the rest of the community, talk to other people who have similar questions, and join other people who like talking about investing, stocks, or news, anything related to the value investing world. So if you'd like access to that, please message us, info@valueinvestor.org.
Perfect. So let's get started on Micron Technology. Kick us off, Hari.
Yeah. So, like I just said, we're using this checklist, and the first question on the checklist is, what does this company do? And be able to summarize that in fairly quickly in less than a couple of sentences.
Yeah. So Micron Technology, as they define it, I like to always kind of start this question off with how they define it themselves within the company. So if you look at the 10K, it says the following: Micron Technology, including its consolidated subsidiaries, is an industry leader in innovative memory and storage solutions. So what does that actually mean? So they produce memory and storage chips. So what people consider in the industry semiconductor industry, they are part of that industry. So they make small chips that goes into computers, smartphones, tablets, game console, and more cloud computing, things of that nature. So they make memory. So you can think about flash drive, for example. Everyday use, we use flash drive to storage, to store content, digital content. You can also think about RAM. If you're not familiar with that, it's how computers. It's one of the components that is used for computers to operate. And then, of course, as I mentioned, all the memory solutions. And so they are a giant company of a market cap of about $63 billion. They're based out of Boise, Idaho. I thought that was I knew about Micron, but I had no idea that they were headquartered in Boise. So, Boise, Idaho. They started 40 years ago, 1978. They are a giant company, as I mentioned, fourth largest semiconductor company. They operate out of 18 different countries, and as you can imagine, they run a huge operation in terms of manufacturing. You need to be able to manufacture these memory and storage solutions at a very low cost, and so you can imagine they have a big presence over in Asia. 13 manufacturing sites total in Taiwan, Singapore, Japan, obviously here in the US, China, Malaysia, and many, many subcontractors. Just a little bit more highlight on this. They have about 27,000 employees, and we'll talk about intangible assets and their kind of moat, but they do have a lot of patents, over 13,000 US patents, and then about 5,000 active foreign patents. So I'll leave it there, and then we can dive into more specifics in the following questions.
Boy, Becco, that was the longest two sentences I've ever heard.
It's quite long, isn't it?
Yeah, he just doesn't stop talking, you know.
I know.
You see what I have to put up with? Like, yeah, so, that's a good start. Let's kind of move on to the competitive advantage to see how what we just learned, how does that work? So does Micron have a competitive advantage? And as we talk through that, well, let's excuse me, let's discuss that in specific questions. So, do you think that they have a moat that would be, based on their brand, the Micron brand?
Yeah, I would say no. I mean, I think brand is. It's interesting because I think, brand, as I think of it usually classically, is more of a consumer-facing companies. This is obviously a part of an end product. For example, you don't buy Samsung phone because you think that there's a Micron chip in there. Right?
Yep.
So in that sense, it's not. I mean, if there is anything, it's minimal. But there is certain elements of brand awareness and trust that comes with using Micron if you are Samsung or Huawei or any of these smartphone companies out there. So there's probably some of that, but in the way that we would imagine brand moat, there probably isn't much here.
Yeah,
what do you think, Ari?
Yeah, so I mean, I think as you were talking about that, I think the thing that kind of popped into my head is, I'm sitting next to my, I'm a hobbyist, I build my own computers. I have my own, computer rigs. I have 3 or 4 of them that are just sitting right next to me. And I can tell you what CPU is in each one of them. I can tell you what GPU is in each one of them, the brand. I can tell you the motherboard. I can tell you everything, but I have no idea what RAM is in it. And that's what Micron makes, right? And so I am not, when I'm as a system builder, I'm not thinking, man, I gotta have Micron in my inside, or I'm not gonna have the max performance, right? I can tell you how much RAM I have, but I can't tell you who the manufacturer is, right? And a lot of the decision making is just based on price, which should tell you that there isn't really a competitive advantage in, from the brand perspective.
Yeah.
Okay, let's keep looking here for for the next question that comes up, which is, does Micron have a moat based off of network effects? So for those of you who don't know what network effects are, because that one's probably the most ill-defined of these, is do consumers of Micron benefit from other people having Micron RAM or products?
Yeah, I would say, I think your example speaks volumes to answer this question. I think it's a no. Network effect, as we mentioned in the previous episode as well, is usually invoked when you are talking about classically, like Facebook is a good example of a network effect. In this case, there is really no network effect at play, right? A lot of it is just, I need a RAM and you just pick one off the shelf. You don't really think about how many people are using that particular RAM.
Yeah, and
Even if you, yeah, go ahead, Hari.
yeah, I mean, I think that's important. Is that there's no real benefit. There is benefit though when you think about other components in a computer, right? There's a small network effect for having NVIDIA, which is another company that we talked about, because the more people that have NVIDIA, the more software that's developed for NVIDIA, then the more demand there is for NVIDIA products because of the software. So it creates a network of, of feedback loop, basically. But I just don't see that with RAM here either. So, okay, moving on to the next type of moat. So is there a moat for Micron based on switching cost? And for those of you who don't remember what that is, think about your local bank, right? You have a bank that you've used for, since you were in college. That bank, you've opened that account. All of your bill pay is tied to it. All of your things are tied to it. So for you to switch from one bank to another, it's not difficult, but
pleasant.
It's not pleasant either, and it would require you to make a lot of changes. So the switching costs would be high. So how do you think about that with Micron?
So again, I think it's going. I think it's a no here. So I think what you talked about what you mentioned about NVIDIA, the fact that a lot of people use it. There are components that needs to use NVIDIA standards and things like that. If that was the case, switching costs would definitely exist. But in this particular case, I think all these elements that Micron is selling are pretty much swappable.
Yep.
So in that way, switching costs, I would say no here as well.
Okay. So do you think they have a low-cost moat in that they are the low-cost provider of RAM or storage chips or other products?
So I think this is an interesting one because as an industry as a whole, the average selling price for all of these products, be it different type of RAMs or SSD, it is going down. It is going down quite drastically. So from that standpoint, the industry as a whole is experiencing downward pressure because it is effectively, as we talked about, being commoditized. All the product is being commoditized. So from that perspective, there is a kind of overarching theme in this industry. In terms of Micron specifically, I don't think that is the case. I don't think they are the lowest cost provider because of the Chinese entrance into the market.
Yep.
And we'll talk more about this in the subsequent questions, but Micron's relationship with Chinese companies is a interesting one because they sell to Huawei, which is about 13% of their revenue. But at the same time, they receive a lot of products or raw materials, rather, rare earth metal, things like that from China. So they're pretty tied to the Chinese kind of ecosystem, semiconductor tech industry. But at the same time, the place that they serve in as a semiconductor provider, that's also a space that China is looking to get into. And a lot of these companies are, kind of state-backed and things like that, and they're subsidized. And so there's a huge competition coming their way. So we'll talk more about that in the subsequent question. But to answer your question, low-cost provider, perhaps in some categories, but it's hard to tell.
Not strong enough is what you're saying.
Yeah.
Okay. Let's look at the last possible moat, or one of the last ones, which is intangible assets. So do you think that Micron has any intangible assets that would allow them to crowd out the market because they have a government-provided monopoly, such as a patent?
Yeah, I think this one is also interesting because they boast that they have all these patents, right? As I mentioned earlier, 13,000 patents. That is not an insignificant amount of patents just in the US. And you have 5,000 more across different countries. But the problem here is every other company is probably has a war chest of patents. But materially speaking, does that really protect the business? And I think it's a no, because you're effectively producing a commoditized product, right? You can swap out Micron SSD with Samsung SSD, no problem. And Samsung SSD, they're competing against the same kind of technology without any protective barrier, really. And this is also something quite interesting, as we'll talk about in the subsequent questions. With patents, there are a lot of patent infringements going on in this industry, right? People move around from one company to another, and they bring over what they've learned in the past to the next company, and so there's a lot of kind of contention here. But to answer your question directly, there is definitely some patents, but it doesn't have any material moat that I can see.
Okay, and I mean, I think the thing that a lot of their patents may actually be around manufacturing and not necessarily about the actual product itself. So they may have a manufacturing process that may be more streamlined, faster, cheaper, whatever, that they can use to protect, but they're still effectively making a chip that you can replace with something else, right? So how they make it may be different, but which may actually lead to a lower cost. But I doubt that there's anything in there that says I am building a motherboard that can only use Micron RAM, right? That's just not a thing.
Yeah.
Okay. So, I think one thing that may be interesting to talk about, that even though they didn't really meet any of the moat criteria, making RAM chips is not something that you and I can just go with $100 and go start making RAM, right? So if you were a new manufacturer in the RAM game, what would it take to actually come and compete with Micron?
Yeah, so I think that question is relevant to the competitive advantage question. And even though all the things that we talked about, like brand, networking effects, switching costs, low cost, intangible assets, those all didn't really pan out, right, when we just ran through them. But what is interesting is that because they're in a pretty complicated industry, right? And I think complicated in largely two different ways. One is a complex supply chain, right? As we talked about earlier, they have huge footprints everywhere across the world, especially concentrated in Asia, Malaysia, China, Japan. So very complex supply chain. And then also, as you mentioned, very capital intensive manufacturing. So you're talking about building facilities that require billions of dollars of upfront investment, plus additional billions coming in every single year to maintain and upgrade and to stay competitive. And so those two things, complex supply chain, capital intensive manufacturing, those require huge, as I mentioned earlier, capital, but also a long kind of relationship that you need to have with suppliers, because you're talking about a rare earth metal that you can only get from certain suppliers in China, for example. You got a complex web of producers, and so those things would prevent a new entrant coming in. I think if you and I were to start this, it would be very, very complicated and very arduous process to get it right. And even if we get it right, you're still having to deal with all these other non-moats of the industry. Brand, network effect, a lack of brand, network effect, switching cost, low cost, all these things.
Well, this would be a bad time to tell you, Becco, that I was going to propose that we would just quit the podcast and start at a RAM manufacturing, but
oh man,
I guess you're not into it, so
I don't think so, Ari.
I guess we'll just stick to making a podcast about value investing.
So.
All right, so how durable? So we found a competitive advantage in that there was a high cost of capital to get started. Actually, I shouldn't use the word cost of capital. A high capital entry to get into this business, right? This is in some ways kind of like how airlines or other heavy manufacturing kind of operate. You have to have a very high amount of capital just to get into the into the game, right? Like you're not going to wake up and one day become make battleships for the U.S. Navy, right? It takes money, it takes time, it takes so there's strong advantages to doing that, and Micron has some of those because as the industry consolidates, 30 years ago there were probably many more RAM manufacturers than there are today, and then Micron has bought some, and other companies have gone out of business, and so on. And so as the industry consolidates, you have a few players that can actually dictate things, and then maybe, the wild card in all of this was kind of China, right? Where China came out of nowhere, and they basically subsidized the tech to build this stuff, and so that's how they've been able to compete. But moving on to the next question, so how durable is this advantage, and what are the risks for that current competitive advantage?
Yeah, so I think what would be interesting to do is maybe just look at the revenue growth, net income growth, and then free cash growth for the past 10 years, and then look at how they've done, and also look at, as you mentioned, some of the risks involved here. So if we look at Micron's performance, top line performance, so as I mentioned earlier, in 2019 they had a decent year, not so great year. The revenue went down from $30 billion to $23 billion in 2019. But overall, for the past 3 years, about 20% compounded annual growth rate. For the past 5 years, 27. For the past 10 years, about 18% compounded annual growth rate. That's just the top line. If we look at net income for the past 3 years, this is kind of skewed because 2016 they had a pretty terrible year. So let's say 2019 you're talking about $6 billion in net income, and then say 2013 about $1 billion, 2014 $3 billion. So they are making good progress in the net income side. If you look at free cash flow, so you're talking about for the past 4 years about 30% growth rate, compounding annual growth rate. So despite kind of the doom and gloom that we painted in terms of competitive advantage, they are doing well. They are doing pretty well in terms of these numbers. Now, having said that, I think we should look at some of the risks involved in this company. So they outright said in the annual letter or annual report that average selling price for semiconductor has been falling. So if you just look at RAM, for example, from 2018 to 2019, the average selling price dropped 30%. NAND dropped 44%. And then this has been a trend throughout the entire industry, and Micron isn't an exception. And they also talked about declining gross margin. Again, with heavy competition, Samsung Electronics, SK Hynix, Toshiba, Western Digital, not to mention all the other Chinese companies coming into the industry, to the market, the gross margin has been eroding slowly over time. And obviously, this goes to what we talked about earlier in terms of the competitive advantage. So those two things I do want to mention, the declining average selling price and then declining gross margin. Even though you're seeing kind of good growth rates across the board in the income statement. What are your thoughts, Hari?
Yeah, I mean, I think the thing that kind of makes me worry is that when you have businesses like this, that you talk about this with that are heavy manufacturing businesses, right? What I'm most interested at this point is, what does it actually take to keep this thing maintained, right? Like, what is their CapEx to just keep this thing safe, right? I know we haven't really gotten into that, but you spend a lot of money to get all of these things ramped up. The prices keep declining, and but you still have to keep maintaining this because the RAM keeps upgrading. There's newer technology. There's faster everything. So where does this stop, right? Where does the where do you get squeezed from the top line side, being the price pressure keeps going, and eventually you still have to you'll run out of money that you have to spend because you're getting squeezed on the top line, right? So how does that all tie in? So I think we should just pay attention to that when we talk about valuation.
Yeah, for sure. I mean, just to paint a little bit of color on that, the estimated CapEx for 2020 was $7 to $8 billion, and we'll talk about more of this in detail. But you're talking about CapEx of about that magnitude every single year for the past 5 years. You're 4 billion, 5 billion, 4 billion, 8 billion, 9 billion. And that is percentage wise, it is pretty significant amount of money. So net, we'll talk about more in detail, but free cash flow is about 3 billion, was about 3 billion, 8 billion previous year. And so relative to that, you're talking about a significant chunk of capital going into just maintenance plus, upgrade.
Yeah. Okay. So what do you think are the company's prospects and runway for long-term growth? Do they have? I mean, this is not just about the company, but it's also about the industry. People are not using. Their consumer behavior has kind of changed from 10 years ago. Most people had desktop PCs. Now it's smartphone, mobile, etc. And you have different things, and you also have what the competitive landscape looks like. So, what are your thoughts there?
Yeah, I imagine some of the very bullish years that they had as a company and as a semiconductor industry as a whole is partly contributable to the rise of smartphones and all these tech that is coming out, kind of downstream from where they live as a semiconductor industry, right?
Yeah.
So the rise of smartphones, the rise of better computers, the rise of recently the cloud computing. It is definitely a boon to semiconductor industry. And the question is, how long can this continue, and what will be the next growth driver of this? Semiconductor is in service of downstream industries, right? And so when the downstream industry, for example, like say a smartphone manufacturer, experiences significant decline in volume of sales, they're going to be affected. So unless there is some sort of new innovation in the future that is going to drive the semiconductor business, it's going to be hard, I think, to see the kind of growth that we have seen for the past 10 years. So that's one thing I'll say. Another thing I will say is something that I mentioned as it relates to China. So I'll just read you guys a small excerpt from the 10K. In particular, we face the threat of increasing competition as a result of significant investment in the semiconductor industry by the Chinese government and various state-owned or affiliated entities that are intended to advance China's stated national policy objectives. So there's obviously going to be some competition coming their way. China has a very top-down approach, and if they are determined to do it, they will most likely do it. And then if they're financing it with state-backed capital, it's going to be severely subsidized. So you're going to see a lot of that competition coming into play. The trends that we're seeing in terms of decreasing gross margin and lowering average selling price (ASP) is also going to continue with this. So that's a threat to the long-term prospect. Kind of minor thing, but kind of legal proceedings here and there. As I mentioned, there's a lot of patents, and people jump around from one company to another. So some legal proceedings, but that's not a major threat. But I'll say those two, I think, is a pretty significant threat that we have to consider when we're talking about long-term prospects.
Okay. Do you think that the company requires a lot of reinvestment to maintain its business? And can it grow further without any further reinvestment? So we've already kind of touched on this. The you mentioned that on $60 billion in revenue, they're spending about 7 or 8 in CapEx, which is very high. So, what do you want to add to that there?
Yeah, so I would add just, obviously, as you mentioned, the CapEx, but also the R&D cost. So if you look at the percentage of revenue R&D going out as an expense is about 10%, 10 to 8%. So which is not, like eye-popping or anything like that, but it is a cost that has to go in every year for the upkeep. And then, as you mentioned, the CapEx. So just to give you guys a little bit more color on that, as I mentioned, free cash flow of about $3.4 billion. But if you look at the CapEx, you're talking about 9 billion, 8 billion, 4 billion, right? It's going up. It has been going up for a long time. It's been growing, in fact, at about 30% compounded annual growth rate for the past 3 years, 43% for the past 5 years, and about 14% for the past 10 years. So it is a significant upkeep, not to mention all the factories. I mean, those CapEx is going into some sort of plant, property, equipment. If you look at the spread of where all of their footprints are, you're talking about $9 billion worth of PPE, proper plant equipment in Taiwan, Singapore about 8 billion, Japan 5 billion, US 5 billion, total about 28 billion property plant equipment. So it's a sizable global company that is hungry for capital every single year just for the upkeep and plus to stay competitive. Yeah. So to answer your question, it definitely is a capital intensive business.
All right. So one more question here before we wrap up this episode, and then we'll continue it in the next. Does the business have favorable relationships with the following? And I think we can be brief about this because I don't think we need to dwell too much on these. This is more about finding red flags. So any red flags that you see with their customer relationships?
I would say just the proportion of customers who take up significant part of their revenue. So Huawei, I think, is something that comes to my mind, especially with all the talks around banning Huawei. Huawei's customer being, Western countries, led by U.S. There's some opposition around using Huawei technology. Micron, 12% of their revenue goes to Huawei. So there might be some red flag around there. That's the only thing that I want to point out.
Okay. How about with their suppliers?
Again, with suppliers, very certain rare minerals, rare earth minerals, are primarily coming from China. So with geopolitical risk, there might be some concern there. With these companies that have manufacturing facilities outside of the U.S., especially in China, you're talking about an optimized, very optimized supply chain, very optimized manufacturing facility. But at the same time, when you are so global, it presents itself to challenges of geopolitical threats, and as we're seeing now with things like coronavirus could really impact their operations. So that's something to keep an eye on.
Okay. Any issues that you see with employees, regulators, or the community?
Nothing really outstanding. I mean, I guess one thing, just the patent issues. They're kind of constantly undercurrents of this. They're always around. So I just that, but nothing else around employee, regulators, community. I don't see anything. I don't see any red flags.
Okay. All right. Well, that covers the first half of our talk about Micron. I think we have a lot more to discuss in the second half, which we talk about more about the profitability, valuation, management, And at this point in our checklist, we haven't really said that this company was a reject. There's nothing that just makes us think we don't want to be involved in this business. But now we have to kind of decide if we want to be in this company, what's the right price, and what are some of the other things that we want to look at, or be aware of when we invest. So with that, Becco, you have any other comments?
No. As I mentioned earlier, this company was brought to us by our trusted listeners. So if you guys want us to look at a company that you're interested in, please send us what company and why, potentially. That could also be interesting for us to know. You just email us at info@valueinvestor.org.
All right. Well, okay. Thanks for tuning in, and I think we'll see you on the next episode.
Okay. Thanks, guys.
All right. Bye.